Welcome to the Options Income Blueprint Weekly Income Report. This is Michael Schulman on August 15th, 2022. We don't have live trading tomorrow. It's a week off from having to listen to us. On the other hand, there will be new positions put out via alert. And of course, as always, all positions will be managed in some fashion, closing, rolling, opening via alert. We opened and closed a couple of trades very quickly last week. The Roku trade is the one I want to focus on because there's sort of a twist in the story behind how and when the trade was opened and closed. We had four winners, a very nice return, but the week just wasn't these four. It was quite busy. We had a large amount of income coming in from roll positions. This is going to continue to happen. We have four core positions, Citigroup, Marvel, General Motors, and Pfizer that we're just going to roll and roll and roll, just keep that cash coming in. And we also have some positions that I will try to exit at break even when we get to that point. This says it all in terms of the returns and the total cash coming in. And we had, in one sense, less than expected or less than hoped for, target rate of return in cash is still 15%. And that's because the amount of capital that we expended, including positions that we did not touch last week. So the capital wasn't being used that specific week to pull new cash in. We had sold puts that were expiring this week. And that's why there's disconnect between those high numbers that you see on the previous chart and this overall number. So the roll trades are on target. I always accept, it's less than 0.5, usually 0.375 to 0.4 is acceptable for moving a put out a week or two or whatever it might be. New trades did just fine. Thank you. Now, what was going on last week? The market was in a good mood. Part of the reason was that the consumer price index came in slightly lower than people on Wall Street were expecting, in addition to a very visible decrease in gasoline prices. CPI translates into inflation fears. Inflation fears translate into interest rates translate into movements in the bond market, which then translate into movements in the equity markets. So the question now is this a bear trap, meaning we're still in a bear that will continue, and the trap means people are coming in because they think the bear is over. The surface numbers show that inflation may have peaked, but it's still way too high. I mean, the most conservative members of the Fed want to get it back to 2% as a target. I don't think Chairman Powell is that aggressive. That'll take years, and in part because of the labor market. And in part, while commodity prices are coming down, some of them are now at pre-Ukraine war levels. They're still elevated. And will earnings continue to be good going into next quarter and the quarter after? So there still is a lot going on. It's not a time to be complacent. It's not a time to say, oh, this correction lasted longer, but it's over. We don't know, and we're going to trade assuming that we don't know. So to that point, because unpredictability here is very, very important, and I'm going to go through this with a little bit more detail than I might normally for just the sale of a put that we closed the next day. When you're trading a stock, you have to be aware of events from competitors and other influencers that have a direct impact on that stock. And it's very easy to miss this. You may say Walt Disney is a travel stock, so we have to watch the travel sector. Or we have to watch just Netflix because they're head-on competitors. But you also have to watch Roku. And the bottom line here is Roku is the brand. It's the middle person between the streamer and the content provider, and it's completely dominant. It doesn't perform as well as Wall Street would like in terms of monetizing customers, but it's a fundamentally terrific company with a very bouncy and exceptionally volatile stock. And so any news concerning streaming is going to be news about Roku's future. When Netflix announced earnings a couple of weeks prior, their streaming numbers showed they were losing customers, but not at the pace Wall Street thought. The stock went up and Roku went up. So you know this, I know this, going into earnings, and this trade was going to take place on a Tuesday at 11 o'clock in the morning Eastern Daylight, and Disney's earnings were coming out on Thursday. This was all known, so the question is, can we put something on that we can close, or would we close with a loss as opposed to a profit and then get back in. As you know, here we'll close with a paper loss, and then when the event causing us to exit and avoid the tumult of the market, we get back in and it's all one uniform position. So this is the discussion you would have had with yourself. I had with myself and members. And the hope was to close quickly. And the belief was that even a small profit would make it worthwhile, because we've been trading Roku anecdotally. Trade it 1 week, watch it 3 or 4 weeks, trade it again. In part because this is a chart, that this is a stock that if you like the fundamentals, but Wall Street's valuation can be all over the place, you're really more dependent on the charts than, let's say, with a core position like Pfizer. So the trade itself was at 11 o'clock on Tuesday. We sold a $71 put for $53 per contract. This is a silly put, and this is the only way we trade Roku, and that's 10% below the share price is the strike price for a 1 to 2 week trade. And if we were trading more than 2 weeks, selling, let's say, something expired in 17 or 19 days, that would have been a 15% out of the money. And we had choices to make. And the choices are here. Why would you close early? The math was compelling. There's an unpredictable event around the corner, and the position would be exceptionally volatile. Well, when we closed, the math was compelling. We closed because, yes, there was an event around the corner. Yes, we closed because Roku is exceptionally volatile. It fit all that criteria, but the math was a tremendous driver. We could close. We paid $13. We had a $40 profit on a contract in a day. 2 calendar days, and that's how we do the analysis of annualized return. That's 103% annualized return, which is the gold standard. Annualized returns are the gold standard for setting goals, pardon the pun, and for doing anything. And we have a target rate of return, as you know, of a 25% annualized return overall over the course of a year. This would clearly help us get there. So if there's an admonition here for when you're doing your own trading is, for example, in one of our core stocks, Marvel. Marvel has been around forever and is a very, very, very fine company, but with an enormous product line, which had made a lot of Wall Street chip analysts sort of indifferent to following it. You know, it's easier to follow memory or microprocessors or graphics processors or high-end server chips. Marvel had a lot of components and chips, but it has a very important position in the electrical vehicle market. So you have to, even though it sounds strange, and there's dozens and dozens and dozens and dozens of publicly held chip companies, if you're in Marvel, as we are, you have to be aware of what's going on with EVs, and to know what's going on with electrical vehicles, you actually have to read what the government's doing. So there are things you need to keep an eye on. Disney, we kept an eye on for Roku, and so forth and so on. And by the way, Disney busted through its target for streaming customers for this year, and Roku went up about 5% after the Disney earnings announcement. So trading this week, as I said, no live trading. We'll be trading via alert. And you might see me push positions past Labor Day. We have very light trading the last couple of weeks of August. Wall Street's on the road, people are on the beach, et cetera, and it just lightens up. And I can say with some confidence that stock picking is back. And while stock picking is back, illiquidity makes it a little bit dicier for us to navigate and say, well, we should do this position, but there's only 100 contracts outstanding. So I'll be careful with that, if you will. And I will be seeing you not tomorrow, but a week from tomorrow. Thanks for listening. This is Michael Schulman.